China is a long game on this one, and they believe that they eventually will be able to get rid of the dollar.
I think that Xi Jinping and others are rooting for a default on America's debt because at the end of the day, they want to undermine the US dollar.
And if you're China, you're rooting for a default.
China is likely to reduce its holdings of US debt.
Unless the dollar is weakened meaningfully, the bond market will melt down.
Some of the largest countries in the world have been aggressively selling off US debt. So in this video, let's talk about who is selling US debt, why they're selling billions of dollars worth, and what this all means for the dollar and the United States going forward. But before we get into that, we need to talk about why this is such a big deal. Countries buy US debt for various reasons, but really the main motivation is US debt has historically been one of the safest investments. Otherwise known as US treasuries or bonds, US debt is issued by the United States government, and they are 100% backed by the full faith of the issuer. The United States has a strong track record of repaying its debt and maintaining economic stability. This makes US debt an attractive choice for countries looking to park their excessive reserves in a secure and low-risk asset. But there are two problems with this that are actually at the heart of why I make YouTube videos. First, the United States track record, while still strong, is starting to unravel. Speaking specifically about its debt management, US debt is climbing exponentially at an unsustainable pace. In fact, in 2023, it is estimated the US will pay $663 billion in interest alone, and it's projected to pay over $1.4 trillion in 2033. The US debt crisis is one of the greatest financial issues that the country currently has, but I would love to hear from you. Down in the comments, let me know what you think the US's greatest financial hurdle is. The second problem with why the US debt is such an attractive option for countries around the world is actually the main reason for this video today. Emerging countries around the world are conflicted. For one, like I mentioned earlier, US debt is one of the safest investments in the world, backed by the quote-unquote honest word of the US government. But on the other side, these countries, mainly led by BRICS, are trying to become more autonomous away from the dollar and the United States. In the short term, this could be seen as risky, as their currency reserve will still need to be invested, likely in a less safe option. But in the long term, this could snowball into a large enough situation where you actually start to see negative implications for the US economy. So the way right now these countries are reducing their exposure to the dollar and the United States is by selling off their current bond positions. But which countries hold the most US debt? This visual is a fun way to look at the largest US debt holders by region in the world. The top 3 foreign holders of US debt are Japan, China, and the United Kingdom. Most foreign governments actually own less than 1% of US debt. The big buyers are Japan with 4.4% and China at 3.4%. So effectively, these countries give the United States their money in exchange for a promise to pay with interest at a later date. The US government then uses that cash to finance its spending, which we know is operating at a significant deficit. China and Japan specifically have been selling off a lot of US debt. From July 2022 to July 2023, Japan has sold off about $118 billion worth, and China has sold off $117 billion worth, or about 12% of their entire holdings. But they aren't the only ones, and this is not a coincidence. Saudi Arabia is the latest country to offload a massive amount of their US Treasury holdings. Their holdings are down a little over 40% since 2020. The two biggest buyers, Japan's and China's share of US bond holdings dropped to record lows. Here, you can see it for yourself. This is the decline of the holdings for both countries combined. This is how Japan's holdings of US debt look, a sharp decline, and how China's holdings is the same story. Specifically talking about China, this huge debt sell-off makes sense as holding massive amounts of US debt no longer aligns with their long-term goals economically. And it's safe to assume that this is going to continue. But if these countries are selling, that means someone has to be buying, right? Well, it actually could be you. Indirectly. Hedge funds could be busy buying up this US debt, which in turn could impact your retirement accounts, 401k, etc. This US debt sell-off is another way countries around the world are visibly showing their frustration towards being under the large shadow of the United States. But what exactly is at their core for their hatred of the dollar? Find out in this video here.